Bitcoin be the key to unlocking a new era in our financial system? Let's delve into this intriguing question. Bitcoin, the world's first decentralized currency, is rapidly reshaping our financial landscape. It's not controlled by any government or central authority. Instead, it's driven by a global network of computers, making it accessible to anyone, anywhere, at any time. How does this compare to our current financial system? Well, traditional banking is centralized, often bureaucratic, and can be exclusionary. It's bound by working hours, geographical limitations, and often requires substantial personal information for something as simple as opening an account. In contrast, with Bitcoin, all you need is an internet connection and a digital wallet. It's as simple as sending an email, and it's available 24/7. The potential of Bitcoin extends beyond mere convenience. It offers an alternative to people in countries with unstable economies or those who are unbanked. No longer do they need to rely on a volatile local currency or a financial institution that may not have their best interests at heart. With Bitcoin, they can take control of their own wealth, free from interference or manipulation. But it's not just about individuals. Bitcoin has the potential to revolutionize businesses too. It allows for faster, cheaper, and more secure transactions. It can eliminate the need for middlemen, reduce costs, and increase profit margins. It's no wonder that companies, both big and small, are beginning to accept Bitcoin as a form of payment. Yet despite these advantages, Bitcoin is still not mainstream. Why is that? Well, one of the reasons could be its volatility. The price of Bitcoin can fluctuate wildly, which can be a deterrent for some. Also, its technical nature can be intimidating for those not familiar with the digital world. There's also the issue of regulation, or lack thereof, which can make some wary. Bitcoin is not just a currency, it's a revolution, a shift in how we perceive and use money. But how can we make it more accessible and mainstream? That's where Bitcoin ETFs and halving come into play. But we'll delve into those in the next scenes. Stay tuned. One of the ways we can bring Bitcoin to the masses is through a Bitcoin ETF. But what exactly is a Bitcoin ETF? Well, to break it down, an ETF, or exchange-traded fund, is a type of investment fund and exchange-traded product. In essence, it's a basket of different assets like stocks, bonds, or commodities that you can buy or sell through a broker on a stock exchange, just like regular stocks. Now, here's where things get interesting. A Bitcoin ETF takes this concept and applies it to Bitcoin. It's a fund that holds Bitcoin as its primary asset. By investing in a Bitcoin ETF, you're indirectly investing in Bitcoin. You don't have to worry about buying, storing, or securing Bitcoin yourself. The ETF does all the heavy lifting for you. So how does a Bitcoin ETF differ from traditional ETFs? Well, traditional ETFs usually track a broad-based index or a basket of assets. A Bitcoin ETF, on the other hand, tracks the price of Bitcoin itself. This makes it a very specialized kind of ETF, designed specifically for investors looking to gain exposure to Bitcoin without the associated risks and complications of owning the digital currency directly. One of the biggest advantages of a Bitcoin ETF is its accessibility. Because Bitcoin ETFs are traded on traditional stock exchanges, they're available to a broad range of investors, from individuals to institutions. This can help bring more liquidity to the Bitcoin market and potentially make it more stable. Another advantage is that Bitcoin ETFs offer a more regulated and secure way to invest in Bitcoin. They are managed by professional investment firms that must comply with strict regulatory standards. This can provide peace of mind for investors who might be wary of the risks associated with investing directly in cryptocurrencies. So, while we're still in the early stages of the Bitcoin ETF story, the potential is there. A Bitcoin ETF could be a game changer, bridging the gap between the traditional financial system and the world of cryptocurrencies. It could help bring Bitcoin into the mainstream, making it more accessible and attractive to a wider audience. A Bitcoin ETF could be a game changer, bridging the gap between the traditional financial system and the world of cryptocurrencies. Another important concept in the Bitcoin universe is halving. So what does it mean when we say Bitcoin is halving? Well, it's a bit like a gold miner finding out there's half as much gold in a mine as there was the day before. In a nutshell, Bitcoin halving is an event that happens approximately every 4 years. where the reward for mining new blocks is halved, meaning miners receive 50% fewer bitcoins for verifying transactions. Now, why does this matter? Imagine you're a miner. You put in the same effort, but you get only half the reward. It's a bit of a bummer, right? But here's the twist. This reduction in the reward rate effectively slows down the rate at which new bitcoins are generated, which impacts the overall supply of bitcoins. You see, there's a cap on the total number of bitcoins that will ever exist, which is 21 million. With each halving, we get closer to hitting that cap. And as we all know from basic economics, when supply is limited and demand is high, prices tend to rise. So what's the potential effect of halving on Bitcoin's price? Historically, each halving has led to a significant surge in Bitcoin's price. For instance, in 2012, the first halving occurred, and the price of Bitcoin increased from around $12 to over $1,000 within a year. Similarly, the second halving in 2016 saw Bitcoin's price jump from approximately $600 to nearly $20,000 in a year and a half. Of course, past performance is no guarantee of future results. But it's interesting to note the correlation between halving and price spikes. In essence, Bitcoin halving is a deflationary measure. It's a way to ensure the longevity of Bitcoin by controlling its supply, much like how the Federal Reserve controls the supply of money. But unlike central banks, Bitcoin's supply rule is predictable and transparent to everyone. Bitcoin halving is a unique feature that could potentially drive its value up. It's a part of what makes Bitcoin an exciting investment. So, what could the approval of a Bitcoin ETF and the process of halving mean for the wider crypto market? Well, let's dive in and explore this intriguing topic. Imagine a world where Bitcoin is more accessible to everyday investors. A world where the volatility and risk associated with purchasing Bitcoin directly are significantly reduced. This is the world a Bitcoin ETF could create. By providing a safer and more regulated means of investing in Bitcoin, the approval of a Bitcoin ETF could lead to an influx of new investors in the crypto market. This, in turn, could drive up the demand and price of Bitcoin, spurring growth in the wider crypto market. Now let's consider the halving. This process, which involves the reduction of the reward for mining Bitcoin by half, is designed to control the supply of Bitcoin and prevent inflation. However, it also has a significant impact on the crypto market. With each halving, the supply of new Bitcoins entering the market decreases, which, according to the principles of supply and demand, could drive up the price of Bitcoin. This potential increase in price could attract more investors to the crypto market, further stimulating its growth. But the potential impact of these events extends beyond just market growth. Increased adoption of Bitcoin and other cryptocurrencies could usher in a new era of digital finance. It could challenge the traditional financial system and offer a more decentralized, transparent, and inclusive alternative. This could benefit individuals and businesses alike, providing them with greater control over their finances and opening up new opportunities for innovation. So, the approval of a Bitcoin ETF and the process of halving could be transformative for the crypto market. They could drive market growth, stimulate increased adoption of cryptocurrencies, and challenge the status quo of the financial system. These events could usher in a new era of growth and innovation in the crypto market. Indeed, the future of finance may very well be digital, decentralized, and driven by blockchain technology. With these developments on the horizon, what does this mean for you? Let's delve into the opportunities that these advancements could bring to individuals. The potential for increased investment opportunities is enormous. Bitcoin ETF approval would mean that Bitcoin, and by extension other cryptocurrencies, would become accessible to a wider range of investors. This includes those who may have been hesitant to venture into the crypto market due to the perceived complexity or risk. It's an invitation, if you will, to a new world of investment opportunities. But there's more. This expansion in accessibility could bring about a level of financial independence that was previously unattainable for many. In a world where traditional financial systems often seem to favor the elite, cryptocurrencies led by Bitcoin offer an alternative. They provide a democratic form of finance, one that is decentralized and accessible to all, regardless of wealth, location, or status. The ability to invest, trade, and profit from cryptocurrencies could potentially empower individuals like never before. Now, let's consider the disruption of traditional financial systems. The approval of a Bitcoin ETF would not just be a victory for Bitcoin or even for the crypto market as a whole. It would be a signal, a sign that the digital revolution is not coming. It's here, and it's here to stay. This disruption could lead to a radical shift in how we perceive and interact with money. It could challenge the dominance of traditional banking and inspire a wave of innovation in financial services. But remember, with great opportunities come great responsibilities. It's crucial to educate yourself, to understand the risks, and to make informed decisions. The future of finance could very well be digital, and Bitcoin stands at the forefront of this revolution. Are you ready to be a part of it?